Hi, my name is Hian Huan. Today I will present the financial statements of the Coca-Cola Company. To start, let's go through some key points. First, we will go over some information about the company. Then we will review the company financial statements in the order of the income statement, the balance sheet, and the cash flow statement. After that, we will analyze the data from the financial statements. Coca-Cola is a brand name known by almost everyone. It is the world's largest non-alcoholic beverage company. Its first bottle was sold in 1886 in Georgia, and 135 years later, its products are sold in more than 200 countries all over the world. As Coca-Cola is one of the S&P 500 companies, it is required to publish its financial statement in accordance with GAAP. Here is the company income statement over the period of 2018 to 2020. You can see that Coca-Cola revenue, cost of goods sold, gross profit, and net of income increased in 2019 and then decreased in 2020. The decrease in selling and distribution expenses were primarily due to the volume decline and effective cost management as a result of uncertainties related to COVID-19 pandemic. One thing to note here is that even though Coca-Cola recognized 11% income from other resources, there's a huge increase within that category from $34 million to $841 million in 2020. This increase is over 2,000%. Next is the balance sheet. What's interesting to me at first is cash. Coca-Cola has $9 billion in 2018 and almost $6.8 billion in 2020, which equates to 25% reduction. The next item with big reduction is marketable securities, with over 60% decline over the recent 3 years period. Because of this reduction, we see a similar trend in the total current assets. The non-current asset had an increase of 3% and over 16% in 2020 in comparison to 2019 and 2018. That brought the company total asset up to 5% over the period. Coca-Cola's current liability decreased almost 50% from 2018 to 2020. At the same time, the long-term debt had increased almost 60%. The company capital surplus has exceeded the company total current liabilities in 2020. Cash from operations was almost $10 billion in 2020, which is down of 6% in comparison to 2019. The net cash used in investing activities show that Coca-Cola started a lot of investing activities in 2019, and that has slowed down a bit in 2020 due to the pandemic. We'll review all the financial statements of Coca-Cola. Let's go through some analysis. From the cash and cash equivalents, as well as the free cash flow from 2018 to 2020, we're able to perform some forecasting of the company's cash for the next 5 years. When compared the Coca-Cola cash position in a longer period, we saw that the company has a significant high cash and low in free cash flow in 2018. So the only data from 2019 to 2020 were used to project the future cash. You can see that the company has good cash forecasting in the future. Over the 3-year period from 2018 to 2020, the cash on hand of Coca-Cola consistently declined. Although the decline trend continues, they significantly slowed down on the decrease from 2019 to 2020 due to the pandemic. The company allowance as a percentage of gross account receivable decreased from 2018 to 2019, but then increased from 19 to 2020, and exceeding the 2018 level. This indicates that the company bad debt increased from 19 to 20. This increase in bad debt is an effect of the coronavirus pandemic. However, the company management should really review the bad debt and account receivable policies to reduce the bad debts and increase collectibles. Inventories consist primarily of raw material and packaging and finished goods. The inventory is valued at a lower cost or net realizable value. The inventory cost is determined on the basis of the average cost or the first in first out FIFO method. The inventory increased from 2018 to 19, but then decreased from 19 to 2020. The consistency in the company's inventory composition shows that the company continues using the same business strategy and does not keep as much finished good on hand. The company gross profit margin decreased to 59% in 2020 from 60% in 2019. In the same spirit, we see that the current ratio nearly doubled from 19 to 20. This indicates that the company is better prepared for handling any short-term obligations that mature within 1 year period. Even though the company spent more than investing activities, the return on investment decreased almost 6% from 2019 to 2020. The purchase of PP&E over the years ended in 2020 and 2019 were $1 million and $2 million respectively. The company estimates remaining life of depreciable property, plant, and equipment has a decreasing trend. This shows that the company either did not acquire as much of PP&E or the company did acquire more PP&E, but the PP&E has significantly decreased in fair market value. Here's the depreciation and amortization. The company used the straight line method to estimate both depreciation and amortization. Coca-Cola is a brand name, so the company has lots of intangible assets with both indefinite life and definite life. Over the 3-year period, this is a consistent decline in all types of intangible assets. With a reduction in intangible assets, Coca-Cola is also expect a reduction in amortization expense in 2021 to 2025. Let's review some key points. Coca-Cola got a profitable return on short-term and long-term investment with a total return of 12.85%. The gross profit of the company increased in 2019 and decreased in 2020 with a gross profit margin has a decreasing trend. Coronavirus pandemic is one of the key factors in declining trend of the company. The allowable for doubtful accounts receivable slightly decreased in 2019 and greatly increased in 2020. Coca-Cola Company should really review the bad debt policy. Working capital of the company significantly increased in 2020 and the company had more free cash flow on hand. In conclusion, Coca-Cola has a strong liquidity power and they are able to pay their debts within their resources. Thank you for your time.